Our plan A is that Citigroup gets the highest improvement in returns of any large bank and that the stock doubles over the next 3 to 4 years. It's just that now the plan B moves more to the fore. Plan B is management does not get the job done. And if, with the stock now below tangible book value, the stock market's saying Citi is worth more dead than alive. So we find it extremely unlikely that 1 year from now, the stock is below tangible book value and you have the same model and management. And if the stock's here in a year from now, a lot of people will have egg on their face. The board, the CEO, activist investor, Value Act, and me, yours truly, because we certainly recommend Citigroup as our top idea. It's been the top performing large cap bank stock this year, but management needs to do a lot more. They have worst in class returns. Return on equity tangible was 11% last year. For both JP Morgan and Bank of America, it was 16%. And by the way, their valuations at the larger banks are much higher than Citi, so worst in class returns, worst in class stock market valuation. And what we hear a lot of excuses. So I went to the annual meeting for Citigroup, and the chairman was asked, why are the returns, why is the performance of Bank of America better? And they said, well, that's a different business model. Yesterday, the CEO presented, and he brought up all sorts of excuses from Mexico, you have a populist president, the stock markets in Asia haven't done very well, capital markets, the wallet share isn't quite as good, they were oversized cards at the start of the decade. And we're like, this is too many excuses, get the job done. And so what we did here is we brought the world's smallest violin to play a sad song for Citigroup because they're selling such a sad tale. Here's the world's smallest violin saying, we feel very sorry for you. But you know what? Either we can play that sad song or Citigroup can show more urgency here.
But Mike, to that point, so if hypothetically management was switched overnight, do you think it would immediately trade higher or not? I mean, are they not already trying to fix all these problems that you identify, but they identify as well?
Well, again, plan A is they get higher returns, and the CEO and the chairman both have said that Citi should get returns this year and next that consensus does not expect them to achieve. So if they get the returns, fantastic. We think the stock goes much higher. If they don't get the returns, we're at the end of this year, they don't get a 12% return on tangible equity, which is their target, then we think that, yeah, you should consider restructuring. I went to the annual meeting almost every time for the last 6 years and said, why don't you sell Mexico? Why don't you sell pieces of Asia? Why don't you more aggressively restructure your consumer business, which has a pre-tax margin that's 1/3 less than its other large bank peers? So they have not done enough.